Hello, everybody. It's Saturday. Let's try a recap of the week real quick. And a big thank you to Sean D and TD Tesla for coming. Let's get into the story. We're going to look at potentially a new layer one killer, which is kind of scary. Some whale games, more dumpage, and some price targets, some on chain data, some key support levels, and so much more. And not financial advice. Let's check in on monthly returns so far. August August is September already, up 2%, not negative, not rectember. Historically, the first 2 weeks of September are rough. We're already halfway through almost. It's the 6th of September. Now, shout out to Matt Haugen, Bitwise CIO. He believes Bitcoin should be at $200,000 by now. Once suppression is removed, it's a coiled spring. What is that suppression he's talking of? That's the question. The problem is there are two whales that are letting go of their bags. Maybe they're pivoting to AI. I don't know. But here we are from Crypto Quant. The whale reserves, the 1,000 to 10,000 Bitcoin whales, over the last 30 days have dropped 100,000 Bitcoin. That is the largest sell-off that Bitcoin has had since 2022. So you all ask, why are we not wearing our moon boots right now? It's because of these two whales dropping 100,000 Bitcoin. But you know what? The market has absorbed it like a champ, and Bitcoin's still over 110K. And that's pretty positive. So the liquidity is definitely there to absorb this. Another key support level as well you got to keep an eye on is 109,000. Shout out to James Check. This is the short-term holder cost basis, which typically is a very good support level. Most of the time, it can break in certain market conditions like tariff tantrums and stuff, but it typically holds. That's where people kind of stack and buy more. The question is, how close are we to the max pain threshold, noting that the pain to the upside is still a very real thing per James Check. 200-day moving average, and the MVRV down around 100K. And that's all you need to know. Things are still good. And remember, October and Moonvember are still to come. Don't throw in the towel just yet. If history repeats, a quick reminder of where we are over the last 5 years, and it's been bonkers. 2020, $100 was worth $100. In 2025, that same $100 will buy you $76 worth of goods, depending on what you're buying. If you're buying things like car insurance or electricity, it's probably more like $40. Anyway, we're not going to go there. Bitcoin, $100 worth of Bitcoin in 2020 is now worth nearly $1,600, nearly a 16x. That's pretty impressive, especially as your fiat goes down, your Bitcoin purchasing power goes up. Another quick reminder, and the stacking continues. Treasuries are it. I've been saying now since last year. Bitcoin treasuries now just beat as over 1 million Bitcoin. Remember, as I say, it's kind of bizarre, but literally there'll never be more than 15 million Bitcoin. And I'm seeing that becoming more and more regurgitated out there, which is great to hear. Love that. But 1 million Bitcoin in treasuries, never be more than 15 million Bitcoin. That's about 6.66% of the supply, owned by just 100 companies. That is pretty wild, ladies and gentlemen. And sadly, this week, a lot of people are having their fingers crossed. Not me, because I was looking at prediction markets, but Michael Saylor was hoping he'd get added to the S&P 500. He didn't, but maybe next time. And we'll cover towards the very end how the S&P 500 decision committee is actually run. It's hilarious. It's actually meme of the day. And Oracle's win the month is very exciting for Oracle's. Think Pith, think Chainlink. They crushed it. Exchange tokens also did very well. Think Binance, Crypto.com. And then Ethereum is in their third seat. Not bad. Staking services fourth. Staking is huge. However, there is a little bit of news that did break this week, and some people are rattled by it, but you haven't really heard from them. I personally would be if I was in a certain type of position. But Google, together with Stripe, two extremely powerful organizations, just unleashed their layer one. Why do we care? Well, it's fast. It has Python-based smart contracts, which are better than the original smart contract provider. No names. You can research it yourself. They have this thing called GCUL, I call it. And it's a permissioned layer 1 designed specifically for institutions and payments and stablecoins. And it's been tested by Visa. It's been tested by CME, tested by some big players. And remember, Stripe and Google have very large hooks into very big players. Many are wondering, okay, if Stripe and Google launch this and it's 100,000 transactions per second, and it's got better smart contracts that are more codable in Python than Ethereum, what purpose does Ethereum serve? That's the question at 14 transactions per second when this puppy runs at 100,000. And I always say, yes, speed matters. 14K is not going to get you to your destination. 14 transactions per second is not going to get you there. 100,000 get you there. Million is better, but 100,000 is a good start for Google and Stripe. So watch this space carefully. And again, there is no token for this, but it could impact some existing incumbents in the space. And on this news, we had nearly $500 million capital of outflows out of ETH on Friday. That is a big outflow, $450 million, 167 million the day before, 38 million the day before that, 133 the day before that, and 165 the day before that. So I don't know if the bloom is coming off the rose, but those outflows are different to the Solana inflows and the Bitcoin inflows. I don't know what's going on with Ethereum. Who knows, but we'll see. And if you do want to trade Bitcoin and Ethereum free of fees, which is kind of nice to do, Drift has this little thing, 0 fee trading on Drift. I had to do this, and some of you all still didn't get the memo. Ta-da! So Drift is actually an interesting platform to use. I've been playing with it myself a little bit lately. Now, other crazy stuff is happening in crypto. Yes, it continues to grow. Literally, stablecoins added another 2 billion since I last mentioned stablecoins. But this is TVL in crypto. It just surpassed $0.5 trillion. That's 500 billion bucks. That is monstrous. Absolutely monstrous. Huge. And we are still early. And in other news, too, a little bit of Tesla news as well. We had a huge Tesla news yesterday between XAI investment and the new comp plan. I think that was Thursday, actually. But now, actually, it was yesterday. There is now spotted, not far, actually, I know this road. I used to ride my bicycle on this road. Affordable Model 2, and it's missing the glass roof, no rear indirect light bar, rear gray insert, painted body panel, etc. It basically is a Model Y, but they thinned it out, and that is what many people call the Model 2 or the new affordable model. We'll see what the price point is. Remember, every time you drop a price of a vehicle down by 5,000, you 5x your actual addressable market. So we'll see what this comes in at. It'll be interesting to watch. And other crazy news too regarding Tesla. They just opened up the Robotaxi app. It's no longer invite only. Anybody can download it on the App Store. And this is completely bonkers here. The Robotaxi app downloads outpaced Uber across all 30-day rolling periods, and it bested Waymo by 6x. And on a random Thursday in September, Tesla Robotaxi app downloads cracked the top 10 of all time ride-hail activation days. And again, a lot of people believe this is already game over for Uber and Waymo before it really even begins to scale. We saw the Elon comp plan. He's got to have 1 million of these things on the road pretty shortly. And that's going to happen. Also, it looks like V3 is out and running around already at the new diner. And this is the proxy statement for the annual shareholder meeting that's coming up. The front page contains the photo of this Optimus and the new look, streamlined, human-like, like never before. It has that's what I call the cyber cab gold. And there's nothing visible in the forearm. The actuators were visible in the past. Now they seem to be cleaned up. and the hands are now black. Now, I know Elon said when he got finished approving the final design, he was blown away. And this is it. It's very pretty. Expect to see, again, millions of these around very soon. And while, if you spend your life listening to banks and taking their advice, be careful. A little warning. And some people confuse JP Morgan with Morgan Stanley. No, they're very different. Morgan Stanley has a great Tesla analyst. JP Morgan, not so much. But this is a cool article from Tesla Hodler. And basically, JP Morgan's top short ideas for the second half include Tesla. And meanwhile, they added 3.43 million shares last quarter and 6.6 million, I think last quarter, about 3.5 million the quarter before that. And they listed it as their top short idea. So they want to suppress the price while they fill their bags at your pain. Be very careful. They did the same thing with Bitcoin, by the way, as well. They said Bitcoin bad. Meanwhile, they're packing their bags with that too. So let's check in on the JP Morgan analyst rating. A guy called Ryan Brinkman. Well done, Ryan. Price target of $115. You are about as clowny as Gordon Johnson with $19, who's just a complete idiot. His dad worked for General Motors. The family live on General Motors bags. And that's why always research into the source of what people say and be very, very careful. Oh, Colin Langan's there too as well. There's a beautiful list of people, like literally price target, a third, less than a third of where the price is today. Kind of interesting. Interesting indeed. Now, there are some scary things that are flying around the internet this week. Everything's getting more expensive. And the demand for electricity is going to be through the roof because of AI exploding. And this is just the US. The price of electricity is going vertical. Wouldn't you all like to be able to buy some of this stuff and then sell it later at a more expensive price? Well, actually, you can. But this is crazy. If you go back to not too long ago, 20 years ago, etc., it was about 5 or 6 cents a kilowatt hour. Now it's 19 cents. And this is the average price of the whole US. If you're in Hawaii or San Francisco, California, it's a lot higher than this. But the question is, what can you do to solve that problem? Well, Tesla has the answer as well. Megapacks from Sawyer Merritt. This is the first ever Megapack set produced at the new Megafactory in Shanghai. And they are turning on their second in the Neon, Australia, their second 270 megawatt facility. And it is huge. These are literally nearly $250 million to set up. And they are now operational, which is massive news too. So again, more money for Tesla because the demand for these puppies is going to be infinite, because the demand for electricity is going to be infinite as well, and the price will only go up. There is another solution too, not just Megapacks, but if you hook up your Megapacks with solar, you can save a lot of money too, and this is absolutely stunning. How many S curves am I showing today? I don't know, at least 2 or 3. But it took the world 68 years to reach 1 terawatt of solar and just 2 years to double it. That, ladies and gentlemen, is what I call exponentiality. More will come. More, guaranteed. A little bit of sad news this week as well. The job reports were revised downwards, and the reality is no jobs are being created in the country, in the US. I don't know how things are around the rest of the world, but based on recent data and people begging for rate cuts to come, very, very important. So this is evident after, I think, nearly 1/3 jobs were taken off the payrolls. They always do downward revisions after the fact. And it's clear that the Fed was correctly or incorrectly basing their decisions on incorrect data. As we say, BLS, BS. Jerome Powell's wrong and he's always late. He's tarnished his reputation forever. And the only thing he can do now is cut in September, which will boost our markets. So stay patient for that. And the other big danger, what's happening to jobs, unfortunately, and we've been ringing the bell here since November 2022, how AI will displace workers. This guy, Jeffrey Hinton, he's considered the godfather of AI. He said AI will make a few people much richer and most people poorer. That's a pretty alarming title from the Financial Times. But AI will be used to automate jobs, everything from customer service to knowledge work. It will remove millions of jobs, especially middle-class ones, white-collar ones, whatever you want to call them. And the AI technologies, typically that of the wealthy corporations, will see enormous profit increases. And as I've always said, the rich will get richer and the majority will see stagnant wages, etc. And the other thing that was interesting, what Jeffrey said here, is capitalism, not AI, is the issue. He doesn't blame AI itself. He's blaming the economic system, which is capitalism, which incentivizes minimizing costs and maximizing profits. You know, if you're watching this channel, you're probably a capitalist. You want to secure you and your family's future. And therefore, you need exposure to AI and disruptive assets. And that's the reality. I hate to end on that depressing note, so I'll cheer it up with a little bit of a meme du jour. This from the Bitcoin Therapist. Just in, S&P 500 Inclusion Committee revealed. The names on this list are brilliant. I mean, it's very young pictures of people like Peter Schiff and Lagarde and the Z guy and the Bitcoin haters. It's hilarious. Jim Chanos, Shorty Mike, it's just very funny. If you know, you know. It's brilliant out there. So anyway, hope you got smarter. Thank you. A very short one today. Only 27 slides, which is kind of not bad. I'll be back tomorrow for the Q&A. Thank you, Adam Q, as well. And B-Man, appreciate you guys. And again, T&D Tesla and Sean Donnelly. See you all tomorrow. Have a great Saturday. Bye.